Hello, hello, hello. What's going on, everybody? Welcome to a capital hungry market analysis and trade ideas webinar. It is currently roughly 8:05 p.m. Eastern, Monday, April 1st. So, we're just going to be doing individual analysis on gold, US dollar, the Japanese yen, and US equities, and then obviously translating that information for trade ideas on dollar pairs such as GU, Euro USD, and USD CAD. Before we jump into a bit of a recap of the events that have passed so far and the individual analysis across pairs, let's just check out what we got going on with our economic event schedule. The hell's not updating for April? Go ahead. Okay, so in terms of important economic data, over the London and European session, we have some house pricing information for the United Kingdom. If this information is still showing us upside and higher than the forecast, it can lead to some strength in the British pound as increasing real estate prices still puts some upside pressure on inflation and still shows that the Bank of England may need to be firm with keeping rates steady in a restrictive territory stance. Then the next set of important economic data is from 3:15 all the way until 4 a.m. Eastern, with some manufacturing PMI figures for Spain, Italy, France, Germany, but more importantly, looking at Eurozone overall here, and then UK figures. These figures look to still be in relatively resilient ranges, potentially rebounding from previous data reports. It can still be potentially optimistic for euro and the British pound. Against a stronger dollar, we may see some short-term pullbacks overnight on GBP USD and Euro USD before looking for better bearish positioning. Then at 8 a.m. Eastern, we have some CPI data for Germany. Not expecting too much market impact from that, as we've already had overall Eurozone inflation figures pass. During our North American trading session at 10 a.m. Eastern, we have both factory orders and JOLTS jobs openings. Both look to still be in relatively resilient ranges, especially with some of the PMI data we've seen today, which can lead to some more dollar bulls and a short-term bearish pullback on gold before continuing the higher time frame bullish trend, like we saw with the PMI report impact today being relatively short-lived. Other than that, going into our individual analysis, when we are looking at gold here, overall gold has been more bullish in structure, printing consecutive higher highs and leading to some more all-time highs being printed early this week into the deeper 2260s. This is from central banks increasing their gold holdings, as well as last week during the market close bank holiday, which was on Friday. We had PCE data just within expectations, and Jerome Powell still bring a dovish to neutral speech, which still keeps rate cut bets active, more demand in gold and asset classes like the US stock market index. Now, when we're looking at gold here, we can see some very strong higher time frame bullish market structure and some very key price points of interest in the near term. We have, of course, this previous significant highs, which can turn into a buyer demand zone for us. We have the last highs here, which was the all-time highs printed into the 2260s. And we have this intraday price point into the 2230s, where of course we had the PMI data lead to some short-term downside, data get priced in, fade out the impact, and still saw more buy orders accumulating from the 2230s, where we can potentially get a double bottom here before seeing better buys to the upside, depending on price action and overall volume and volatility. Overall, we are a lot more bullish on gold, especially if you've been following along the macro higher time frame webinars, and it does look like we can still be extending trend going into potential higher high prices, especially when looking at the macro positioning on the quarterly and monthly timeframes. In terms of some key price points here, I would only see short-term downside if we're really trading well below the 2230s, and that would just be a revisitation of a retest of bullish market structure in this key price sensitivity area, which would be a very strong buyer demand zone to see buy orders accumulated before continuing the trend. We can see here, even during the upside leg we had this break and retest above this area and buy orders accumulated, which would be fantastic to retest, lining up with these previous significant highs. Now, to see that much more aggressive, deeper pullback play, we would need to see more aggressive profit taking by the whales from these highs, which would more than likely be supported by fundamental catalysts of continued very optimistic data. Otherwise, similar to the PMI figures we saw, we could easily just see some relatively normal economic data reporting, leading to some very short-term bearish pullbacks before continuing the macro bullish trend. So further zooming in here, we have those areas of interest to work with. All-time highs printed, where the PMI data double bottomed, where the PMI data got priced in and failed to break, and we may see a double bottom. The key previous highs, where we also saw buy orders accumulated here previously. And this being the area where we saw first signs of buyers profit taking and sellers exhaustion. Now, the first area of interest I would like to see outside of just us taking the range back to the highs and where we've seen this wick and candle body is if we can see the daily candle making a bit of a lower wick and double bottoming into the 2236 key level, 2235 area before continuing some of the further upside. If we don't get that deeper pullback play and we just have continued stronger bullish price action, I would love to see this bearish candle getting faded out, a break above these wicks, and that's still a very solid 100 pip range to at least revisit the last highs here before we start to anticipate reactions. Keep in mind, even if we do revisit this high, there's not a guaranteed you're just going to break. Whether gold is trending bullish or bearish, you do still have the natural reactions at previous highs or lows where you still might see profit-taking moves. In this example, if we can retest into these highs, if we would still have a fantastic 100 pip range to play, 2255s into 2265s, but we can't be surprised if we don't break out higher right away, create a little bit of a double top, accumulate more orders before continuing the trend. So I'm still in the near term looking for buys from 2235 or a breakout from above 2254, 2255. I only see short-term sells if this buy area is invalidated. We break well below 2230, which would be a short-term bearish leg down on the intraday timeframes. Still very strong bearish moves to take advantage of more than 200 pips to retest 2210s before continuing higher. More of the near-term areas I'm looking at are here. So right now we can see on the lower time frame, we've still been maintaining more bullish market structure. We've seen buy side orders accumulated lower here into the 2210s here. And we have this area of interest where we saw, even with the optimistic PMI data, failing to break below the 2233s, 2235s, and still maintaining buyers in control. I would only see short-term bearish plays if we broke below the lower time frame structure to retest into the 2210s before continuing higher. Otherwise, I'm just looking for a double bottom down here, or if buyers come back into play and the break above this bearish candle to be retesting into these last highs printed which still looks like very solid ranges to play. Overall, we're still seeing stronger bullish candles with more consecutive bullish candles, larger bullish candles in very short secondary phase of market structure. Whether the secondary phase of a market structure is an accumulation and breakout, or whether it's a pullback phase that doesn't really hold weight for a significant period of time. Right? So lining that up with the key levels here, alongside market structure, this is exactly what I'm looking for. Intraday double bottom buys from where the PMI data was generally priced in, and we saw more of a candle body and support being created with where the candle bodies were closing, and the majority of wicks were still closing above as well. Retest into this area, making the new daily candle lower wick, failing to break and continuing the bullish trend. If we do not get that deeper pullback phase, we just make a smaller daily lower wick, start to see more buyers price action come into play, even flipping back above 2250s and especially 2254 key level, and where those last candle bodies close with the bearish candle, you get way more price action confirms fading out this bearish candle. This would still look like very good buys to play to at least retest into the last all-time highs. Then we have to be very cautious because we don't know if we're going to have enough volume to break higher. With a majority of the fundamental events priced in, no major economic data in focus right now, no major fear, uncertainty, or doubt in the market right now, just with normal volume and volatility, we could easily be retesting into these last all-time highs, but still showing some profit-taking moves up there. So if we do have this first scenario play out, this is going to be a key make or break area. If you don't see consistent intraday candles on the 30-minute, hourly, 4-hour closing above, more than likely you're still going to see buyers taking profit and a potential pullback phase that can take place there. I'm only adapting to a sell side bias if we're going to see candle body closures below 2236 key level and price action below 2230. This shows me the potential for deeper corrections, which is very possible on gold. We could take advantage of very nice bearish legs down to mirror this upside price action here and at least be going into the 2210s, 2208s before seeing better buys again, which is those rough previous last all-time highs and where we saw this order flow accumulated of more buy-side liquidity coming into the market here. So mainly still a bullish bias, one double bottom bullish play pullback, continuation bullish plays, one adapted deeper bearish leg down before looking for better buys. Now, let me show you some examples of what I mean of gold in normal volume and volatility, trending back to a previous high, but maybe not having the volume to break right away. For example, we can see that right here. Right here, we can see as gold is still in bullish structure, well above the 2080s, and we adapted accordingly, playing some nice bullish runs here. We can see overall pretty clean upside, higher highs being printed. You can see from these higher highs printed, we saw the accumulation take place here as the secondary phase of market structure. You had this accumulation phase, didn't break lower, technical support being respected, even a liquidity grab into this area, and then went into the higher highs. This data-induced pullback here, this was also a data report impact, had enough volume and volatility to see a bearish leg down and give you a range to play. Still a large move, right? Going from 2180s back to 2150s. 300 pip move, 300 pip pullback, but against an overall very strong bullish trend and bullish price action. You can see we went into that same accumulation and failed to break, still seeing buyers in control for the time being. Now, we also went 300 pips right back up, but we did not print any new highs and saw a secondary phase of market structure for the next week before seeing more bulls coming into play with fundamental support and so forth, right? This sequence of events is what we're seeing right now. Right now, gold is still in very bullish structure, and we just saw the first pullback take place here. Right now, we're about halfway up to the highs. We might retest the pullback area or just continue higher. But as we dig into the highs, we have to be very careful of the price action reactions we're seeing. If we're seeing candles failing to close higher, starting to get weaker with more aggressive wicks and smaller bullish candle bodies, then this price action information translates to us that we're seeing less buyer volume, more exhaustion. And it doesn't mean you're going to see some major reversal, but you could easily see another pullback phase before continuing higher. Does that make sense to everybody? So that's just what I'm talking about in this sequence of events. Right now, whether we retest into the 2236s or just continue above here, still pretty decent bullish ranges to play. 2236 retest would be fantastic because that's more than 300 pips to play back to the upside target. Breaking above 2254, not the best, but still a very beautiful range with the gold volume and volatility. A fantastic day trade, more than enough scalps with a 100 pip range to play. But even though we may have this bullish price action lead us into these key areas, we still have to be very cautious here. It doesn't mean we're going to be guaranteed looking for some reversal or rejection, but if we're seeing, as a reference, bullish candles digging up into here, but failing to close higher, starting to get some bearish rejections, more aggressive wicks in this area, then obviously, price action-wise, we're showing that we don't have the clear one-sided volume and volatility to extend into new highs just yet, which means we may even see some deeper pullback phases before continuing the trend with more geopolitical tensions, weaker economic data, or once buyers load up from lower demanded price points. Does that make sense to everybody? Everybody following along? Right? Now, what would be ideal for us who are more in a bullish bias is us continuing up to these highs and having a breakout higher. Very clear indications of intraday candles closing above on the 30-minute and hourly to give us more price action information, because what that shows us is way more buyer volume in play, buyers extending the trend, continuing the momentum trade, and even seeing the last highs now as a retest point to be continuing the momentum trade, continuing the bullish liquidity, one-sided volatility there. This would be ideal. Whether we get this pullback here or whether we continue, what would be ideal is just seeing a breakout higher. Extending trend is always a lot more preferred, right? You can hold your trades further. You can look for more scale-in points. You can ride the momentum. But right now, obviously, we're just sort of in the middle point here. So I would still see first area of interest, DB into this area. Second area of interest, 100 pip range into the highs. And then if we dig up into here, let's just be very attentive to how price is reacting. If we see the breakout higher, then we know the momentum trade is still in play. Buyers are extending the trend there. More volume is still active, and we can continue upside moves into even new highs being printed deeper into the 2280s and so forth. Let me show you an example of that. An example of that is like here. See how for an intraday period of time you were respecting this resistance here, the last local highs and so forth? Still bullish structure, right? Still having your higher high, higher low formation, still can have fantastic buy plays into those highs, hundreds of pips. But we really didn't get the continuation until we saw this breakout play. And then look where you retested before extending even higher and seeing the next impulsive leg up. What we would prefer to see in the current active bullish structure and bullish price action is as we approach the 2060 highs, a move like this would be ideal. Right? It does become a little bit more of a nuisance and a little bit more frustrating when you want to extend trades and you start to see this created at highs. A little bit of a consolidation, secondary phase of market structure, accumulation, whatever you prefer to call it. Everybody wants to see this take place, which would be ideal. In the green box here, sorry. Clean breakout of the highs, strong bullish volume and volatility, nice retest or minor pullback, continue the trend even higher. Right? So that's what I'm looking like or looking to see up into this area with our key areas of interest so far to be playing. Would love to see this. This is my preferred scenario. Would love to just extend higher. Gold bulls continue the tear, break out the high, retest, continue to ride the momentum. Why? Makes it a lot easier for us to understand what's going on from a retail perspective, a lot easier to play the one-sided volatility, more confidence in those plays as well, versus having some nice buys up to here, but then you start to consolidate, maybe bounce from here again, reject, and break out like a week later. It can become a little bit more annoying, just from a psychological perspective. Now, when we're looking at US dollar still following our macro analysis of being relatively bullish here. And we do have the potential for both dollar and gold and stock market to be bullish short term together, but one of them is eventually lying, which I think it's the stock market once the actual rate cut happens. Now, some of you may be asking, well, Jeev, if rate cut bets are so high, and that's the reason the stock market went to a new all-time high, and that's also one of the reasons why gold is so bullish, then wouldn't rate cut bets keep dollar a bit more bearish as well? And if it was just only dollar as the global currency, I would say yes. But we have to understand liquidity flows in the currency market as a whole. It's not just the Fed that has rate cut expectations. We saw other major central banks already do a surprise rate cut, like the Swiss National Bank, and there's expectations that the other major central bank, like the ECB, may do rate cuts before the Feds, and even now that the Bank of England may do rate cuts before the Feds. Because there's expectations that these other central banks may cut rates before the Feds, it still keeps more currency demand in the dollar as your world reserve currency versus your basket of risk currencies. Does that make sense to everybody? I can repeat it again if you want me to. When you're looking at the currency market as a whole, and you're looking at the interest rate differentials and the expectations on rates, there's expectations that the ECB will cut rates before the Fed. This brings more demand in the currency markets towards the dollar, less demand into the euro, right? Even last week, that FOMC move that got faded out and we saw this dollar upside was 100% because the Swiss National Bank, the SNB, did a surprise rate cut. That removes demand and leads to outflows out of the Swiss franc and still leads to more inflows into the dollar with the rate differential there. Right? So when you're looking at the currency markets, there's still demand in the dollar versus the other currencies, versus the other fiat currencies, especially the ones that have already done a surprise rate cut or are expected to cut rates before the Fed due to having a weaker economy. The other global economies, such as the United Kingdom economy, even the Japanese economy in the Asian markets, the Chinese economy, looking at the Euro economy, they're all a lot weaker than the US economy. The US economy has remained very resilient amidst the tighter financial conditions. Hence, the Feds are almost the last ones that are expected to do the rate cuts versus the other central banks. This still leads to more demand and appeal to the US dollar versus the other countries' currencies. This is why, even though rate cut bets for the US are still active, keeping gold bullish and the stock market bullish, you can still have dollar bullish at the same time. And remember, dollar and gold were never one-to-one correlated. You could have something else that keeps dollar and gold both bullish, such as geopolitical tensions and war tensions that aren't directly impacting the US economy in a negative way. For example, during Russia versus Ukraine, both dollar was bullish as your world reserve currency in appeal for its safe haven side, and gold were bullish, right? You just have to understand the inflows and outflows and what increases demand of a certain asset class and what decreases demand of a certain other one. Yeah, for what's reported, you could just Google it. Like I think trading that statistic website, Trading Economics, reports it too. They have a bunch of information there. You could just Google it. Just Google the specific central bank historical data gold holdings, recent data gold holdings. But anyways, so with that being said, I'm still bullish on the US dollar here, especially against some of the other major currencies like Euro, GBP, and so forth. We still have pretty strong bullish structure. We are at this local resistance point where we may see a bit of a pullback, but even if we were to retest into 104s or just continue the bullish move, it still looks like we're going to be digging into the supply zone, into the deeper 106s, 107s before we start to see any more bears come into play on the dollar. So I'm still going to be looking for Euro USD shorts, GBP USD shorts, and USD CAD buys, and even a potential short-term pullback on US 30 before seeing some lower dip buys. Does that make sense to everybody? Everybody following along? Zooming in more on the dollar here, in terms of market structure and price action, we can see the FOMC move that got faded out here, giving us a key point of interest and buy liquidity zone, which it got completely faded out due to the Swiss National Bank doing the surprise rate cut, leading to more inflows into the dollar, less inflows into the Swiss franc there. We can see a bit of an accumulation that occurred here before having the breakout with PMI data today. And we just have this area of interest with this local resistance here to the left. Now, just in terms of near-term price action, even if we get a pullback to this liquidity zone into the 104.4s or just continue higher, dollar's still looking pretty bullish. Remember, both gold and dollar can be bullish at the same time. If dollar is aggressively bullish, you see a massive inflow into the dollar in a short period of time, that can be an indication of seeing some minor bearish moves and profit taking on gold. But we're coming into an economic environment and situations from the global economy perspective where they can both be bullish, especially even if we see more geopolitical tensions escalate, or if we see rate cut bets for some of these other countries continue to still remain ahead of the Fed. Right? Next area of interest when we're looking at the dollar, if we break above this local resistance here, or give or take if we have a bit of a pullback, outside of that deeper 107s is about 106 before we may see some more aggressive bearish moves just from a technical pricing perspective. This still correlates to us looking to extend the GBP USD shorts, Euro USD shorts, USD CAD bulls. This is more of the intraday structure, but I don't see a reason for this strong of a bearish move without a fundamental catalyst. Sorry. To me, it's low probability seeing this aggressive of a bearish move without a fundamental catalyst. Even some of the currency interventions by Japan or China don't even lead to this large of a bearish move. Even the dovish toned FOMC was only this large of a move here. So we would need really consistent weak data and doubled up currency interventions for me to see a very aggressive bearish move on the dollar. It looks like more than likely we could see a minor retest back into 104.5s or literally just be chugging bullish, mirroring this move down here and just going straight back up into the 105.5s and 106s. Right? When we're looking at the financial markets as a whole, still heavy liquidity inflows into other major asset classes outside of currencies. But the currency that does have the most inflow is still dollar compared to like euro, GBP, and so forth. Right? Commodities are still looking hot. Even though the US stock market is seeing a pullback, once a dip is created, it's still looking bullish. Dollar still looking bullish up into the 107s before we need to assess better price reactions and positioning once we get there. So with that being said, when we're looking at GBP USD and Euro USD, we are at a bit of a key make or break technical area here, which you can just see across the board. We've had many failures to break before, which means we could get a minor pullback phase from here, even back into like the 1.26s. But if we just see the simple continuation of the bears and dollar still holding more strength, it does look like the next area of interest we're going into on GBP USD specifically is minimum 1.245s, potentially extending down to 1.24s. Lining that up with the key levels and current pricing, I'd be looking for pullback sells at key level 258 previous lows, or just the break continuation sells. Still respecting bearish structure, more inflows into the dollar, less demand in our basket of risk currencies here. Bearish price action as well. Now, when we're technically looking at GU from current positioning, right now we're just seeing a little bit of indecision back at these lows. If we get any bullish candles breaking above these candle bodies without printing new lows, that's what signals to me the higher probability of a short-term pullback phase before looking for the better sell positioning. Without that, we could just accumulate and then have the continuation trade here. So if you're looking to take advantage of a pullback on GU, the two things I'd be looking for is one, not printing any new lows or really sustaining any new lows on the intraday timeframes, and two, breaking above these candle bodies, a little bit above 1.255 there, then seeing the deeper pullback phases before continuing some of the bearish downside moves. On Euro USD, the areas of interest we're looking at now, where we could potentially see us digging into, especially with this new weekly candle looking quite bearish, dollar still bullish, bearish price action respected, blah, 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 is we could easily be digging down into the 1.06s, 1.05s before assessing reaction on the higher time frame again. On the intraday time frames, we can see very solid bearish market structure being respected, and a little bit similar to GU, just this last make or break area we're digging into here across the board right here. Very strong intraday bearish structure. Pullback phase would just be to the rough 1.08s before continuing lower, or simply just breaking lower. We could even dig into the 1.065s, 1.06s as stated. Euro economy on a macro perspective has still been a lot weaker than the US economy. ECB is still expected to cut rates before the Fed. Still seeing more inflows into the dollar in regards to the currency market, as its world reserve currency stance is holding a lot more weight in the current economic environment. We still have very nice bearish price action. Obviously, we just got this last little bit of a technical make or break area, but similar to GU, you can see that it's very difficult to see a pullback phase unless we're showing failure to print new lows, more signs of sellers' exhaustion, sellers profit taking out of the market, buyers jumping in for a pullback phase, a break above 1.0745. That would show us a pullback to retest at least the previous lows or this minor accumulation here, hugging the key level before continuing the bearish trend. If you do want to take the pullback trade, I would need that list of confirmations there, which would make sense to me overnight if Euro PMI figures are still rebounding. That can be the catalyst for a little bit of dollar softness overnight. GBP and Euro having a bit more strength, the pullback play above this price point, then leading to better sells for the North American trading session, in my opinion, or some of these continuation plays, of course. Three main areas of interest we wanted to look to work with. USD CAD has been in pretty much a sideways consolidation here for a consistent period of time, but to me is looking like an accumulation for a bullish breakout with the dollar holding more strength, less demand in CAD. But you might be asking, gee, GU has pretty clean bearish structure on dollar strength. Euro USD has pretty clean bearish structure on dollar strength. Why doesn't USD CAD have stronger bullish structure on dollar strength? Why has it been moving sideways? Remember, the Canadian dollar has a very strong investor and market participant correlation to crude oil. One of Canada's main revenue sources is the exportation of oil. When oil is a lot more bullish, it does provide some fundamental support and backing for the Canadian dollar. And what we've seen is our oil analysis, which will update this week, has been running very well. Oil's all the way back to $83 a barrel, which besides just the impact on the Canadian dollar, we do have to watch if oil digs higher, the impact on inflation. Energy is a major contributing factor to inflation. This can start to make CPI figures a bit more sticky and troublesome back at these baseline levels, with energy costs going back up, looking at natural gas, looking at other major commodities, and looking at crude oil. But that's a conversation for another time. With what we're focusing on right now, the reason why USD CAD has been moving a bit more sideways is because oil has been providing some support for the Canadian dollar, while dollar's been just starting to pick up some strength recently. So it hasn't been it's been moving bullish, right? Very, like, not the biggest change, but it's been moving bullish, but very choppy, pretty much like a sideways accumulation. I do still see us digging back into the range highs, potentially even higher. Still am on a bullish bias as dollar positioning should take over as your world reserve currency there. I would be looking for UCAD double bottoms from a reactive standpoint, a little bit below the key level here by about 20 pips from 1.353, break above the current candle bodies, 1.359, break above the gray zone buy still. Only see a bearish pullback phase to double bottom into this area from a technical perspective if we're seeing bearish moves below 357. Now, with dollar seeing a little bit more inflows, PMI data pushing back some of the rate cut hopes as it was still very resilient, optimistic data, we got a bit of a double top here and failure to really hold above into the new all-time highs. But US 30 still very, very, very bullish in structure. Beautiful, beautiful bullish structure here as VIX still remains relatively flat. Me personally, I wouldn't even mind a little bit of a deeper leg down, couple hundred more points to be retesting the bullish structure, retesting this accumulation in previous liquidity zone at 39,200s before continuing higher and seeing some dip buyer reactions. No major change in liquidity flows, no major fear, uncertainty, or doubt. Very common to see reactions at previous highs that have been printed before, like we've seen with this entire bullish sequence of events. VIX is still relatively flat. Rate cut bets are still holding the most weight there. One more leg down to 39,200s, or just continuing back above here. Still looks very bullish in structure, bullish in price action. Obviously, if a black swan event comes out, I apologize, but I don't see any major corrections on US 30 until we go into the actual expected first rate cut in June for a buy the rumor, sell the news play, like we were talking about in the higher time frame macro positioning webinar yesterday. So me personally, the retest of structure there, where we had this accumulation here, is around 39,200. If we break these current wick lows, I could see one more bearish squeeze into the 39,200s before looking for buys back into the highs. Otherwise, I'd be jumping back into buys above 39,600s here. And this would be fantastic risk versus reward. Retest the previous significant highs, this minor accumulation before the breakout here, the retest of bullish structure we were looking at when zoomed out, before continuing the trend. Last but not least is GJ. Now, the Bank of Japan has to tiptoe with how they give signals towards pivoting their monetary policy. To me, GJ looks like it could still be following our macro higher time frame positioning of digging deeper into the Brexit crisis prices, 194s and 195s, before we start to look for better short positioning on the higher time frame. The intradays are still in bullish structure, as we just had an intraday high printed here and a pullback phase so far. The next major demand zone I'm looking at to start to see buyers coming into the market or a bounce is into the 188.5s, with the more near-term one being into the 189.8s. If we fail to break these areas, I would start to look for some buy bounces and still see Japanese yen weakness short term. No major policy aggressive signals, policy pivot signals from the Bank of Japan just yet, and them being extremely slow and steady with the unwinding of their ultra loose policy. The Japanese stock market is still respecting bullish structure here, showing more inflows into what the fuck is this? Japanese equities with a nice intraday support being created and some active upside even into the Asian session. Japanese yen individually is still softer. The reason why GJ was more bearish was due to dollar strength, leading to a little bit more demand in the dollar and outflows out of your basket of risk currencies, such as GBP and Euro. This can hold some short-term impact to drive us down into these demand zones before starting to continue some of the more bullish price action, in my opinion. I would see short-term downside to retest into 189.5 before better buys, 188.5, or if we break well back above 190.5s, I'm looking for some buy play setting up on GJ here. Short-term bears only if we break these last lows. But the main three areas of interest, I'm looking for day trade buy setups, even some potential swing positioning. Is the first area I'm going to attempt is 189.5, roughly here. The next area of interest is around 188.8 here. Otherwise, if we don't get those deeper pullbacks, just had this as a short-term downside move, start coming back above the previous lows, I would see buyers just coming back into the table. Yen is still actively bearish, still got more demand in the Japanese stock market there. GJ overall is still respecting intraday bullish structure. On the macro, I can still see us digging back into the Brexit crisis prices like we were talking about in the higher time frame webinar. But this is the first area of interest where we had this accumulation, then started to get the upside moves with the Bank of Japan sentiment and the price action that followed after. Stronger, more consecutive bullish candles, minor pullbacks. I would love to retest into that same accumulation before starting to see more buyers coming into the market and playing some of those dip buys. Now, tomorrow, during our New York scalping session, we'll probably start around 9 a.m. Eastern so we can cover the new 4-hour candle opens from a technical perspective on most brokers. And of course, NYSE open and this data, factory orders and JOLTS job opening. Both these data reports can still be resilient, leading to some more dollar strength supporting that bias, but can lead to a bearish pullback short term on gold, where we can scalp some of the sells before looking for some better buy positioning. Would even be interesting to see gold revisit the all-time highs overnight, and then this data report leading to a pullback from the highs, and then watching price reaction accordingly, and if we're respecting structure or not still. But it's almost like an hour-long market update webinar. I don't want to be yapping too long here. I'm going to save and upload this. Oh, the week. Oh, man, I forgot we're starting on Monday. We'll skip the weekly flow for this week. We're going to be updating every day on what events we have and trade ideas and analysis anyways. We'll start fresh next week with that. This week was a little bit of an interesting start with the holidays, the gap open moves from the Friday bank close. So it's all good. As long as we cover the main meat and potatoes through this webinar. You know what I mean? So, any questions, comments, concerns, problems, issues, complaints before I save and upload this? Thank you, Nalab. Thank you, guys. Appreciate it. Okay, then. I'm going to save and upload this.